first and foremost, we'd like to thank the Lokes family for allowing Colliers to film their Q3 Market Trends videos here at the amazing, newly finished Studio Park in downtown Grand Rapids. In third quarter in West Michigan retail world, we have seen an increase in restaurants coming to the market, new to Grand Rapids, new to Michigan, and new to Midwest. Our activity is high in three main corridors and continues to be high in those corridors, and that's 28th, the Beltline area around the shops at Centerpoint and Woodland Mall, Rivertown Mall, and then also Knapp's Corner. So that's where the activity is the most in-depth right now for retailers coming to the market.
Overall, the market continues to tighten. So good spaces are being leased up. There are fewer options for users. Spaces that are outdated, that have few amenities, that have build out that is outdated, those are still sitting there and having a hard time. But overall market is tightening, fewer options, rates are up, concessions are down for the landlords, lease terms are longer.
What a crazy time to be in the West Michigan industrial real estate market. We are seeing record high prices, record low vacancy rates, and as a result, crazy market factors are happening.
The investment market remains strong and stable with a lot of capital chasing deals, and that capital is, some of that is from tax deferred exchanges where investors have sold assets and are realizing large gains, and they're deferring that through 1031 exchanges into like-kind property in West Michigan.
Here at Colliers, we have a team that specializes in development incentives. Right now, we are working on closing 2 deals with low-income housing tax credits that is going to transform the southwest side.
You also have a fantastic opportunity on the suburban side. The Electric Cheetah will be opening up their new second location at 28th and Thornhills in early December, so look for that.
Companies are looking for new modern spaces. They were looking for spaces that have been cleared out, that they can build to exactly the way they want. That's driving lease terms to be longer because the expense to build out those spaces is high. So that's one of the trends that we're seeing is more 7, 10, 15-year terms to accommodate that new build out.
On a large scale, our team has been involved in some pretty large sale leaseback transactions here in West Michigan that are 8, 9 figure deals. Most of the deals are getting done off market. So it's relationship driven.
Most recently, we've all noticed all the cranes poking around Grand Rapids and West Michigan, and little do you know that a lot of that is done with tax incentives, money from in support from the MEDC. Even this building that we're sitting in right now, the beautiful Studio Park.
Interest rates are at near all-time lows. As I talked about earlier, the vacancy rate is extremely low, and of that 2%, most of that space is actually for lease. For sale, it's a fraction of that. So if you're a user looking for an industrial building to buy, there's literally a handful of quality properties available, and that's it.
So what we look for here is a bit of a slowdown in activity and new stores opening in the fourth quarter, but we'll definitely see an uptick in Q1 2020 for a lot of new announcements coming to West Michigan.
On the horizon, there are new projects that can be constructed. So downtown, there are some projects that are just waiting for things to kick them off. They would be mixed-use projects, and those are various developers. Still early in the planning, but again, if you have those users that can kick them off, that's what's going to drive the new construction.
Moving forward, we expect a lot of the same. Investors are chasing both yield and stability. They're willing to give up some yield for the stability and permanence of some of the commercial real estate investment assets that are out there.
A lot of our clients are still really focused on developing more affordable housing in the West Michigan area, so we look forward to working with them on lots of new successful projects.
So what does 2020 hold for us? Well, we'll see. There's a couple leading indicators we're watching. We're watching the ISM Purchasing Managers Index that's been trending down for the last 3 months. Of course, the yield curve inverted in about late June this year, so the entire third quarter we've had an inverted yield curve. Shipping rates are down, freight rates are down. All of these are leading indicators that point toward a slowdown next year. We'll see what happens. We're optimistic. our pipeline still looks really good, but at some point, I think we all know, things will slow down and we probably will get a recession.